Man, I've done that a couple times. There's nothing more frustrating. All right. All right. So everybody get a recording on their end?
Yep.
Awesome. 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 Well, first off, I gotta be the first to say happy Thanksgiving to y'all. It's gonna be a
Thanksgiving.
week, so lot to be thankful for. And gonna kind of jump right into it. There's Rhonda. I see you now. Woohoo. Yeah. Um, so last week ended up not having a meeting. And I had to kind of last minute run out and do some things. But I also, at the same time, had kind of run through a big loophole in what I'm kind of presenting today and kind of to work through a few things also. And so today is going to be maybe interesting. You know, it's definitely interesting to me. And it's really transformed my whole model of trading and everything that I'm doing. And I have to share it. It's hard to teach one thing and do something completely different. But I'm not doing anything different per se. I'm building, you know, we're adding. In other words, I still got my primary setup that I'm looking for, you know, in that from that opening range. I mean, to me, that's the basis I launch from. But one of the challenges that I've kind of had to go through is I've had to not get frustrated at feeling like I've kind of been taught wrong for so long. You know, because that's kind of what it feels like, because I'm tired of going on to videos and hearing how new traders, you know, get in above these breakouts and this and that. And, you know, and it's been so wired in me to, you know, catch that momentum, you know, those traps, get above or below that opposite colored candle. Um, and that's been frustrating me. So I've really been working a lot more range trading. And what I mean by range trading also is 70 to 80% of the market is in a range, you know, and it trends about 20 to 30% of the time. And when we're in a trend, you know, we say trend is your friend. You know, that's what we're looking for. We want to get into a trend. Uh, and I just say all that to kind of lay the framework, you know, of kind of what we're after, because um, I like to get in on pullbacks versus breakouts, you know, and size, you know, especially when we talk funding accounts, evaluation accounts, we've really said, hey, or identified, hey, we really have to respect the fact that there's a drawdown, you know, and it's not all that large, you know, depending on the account size you got. You know, if you get in on a, you know, 1 to 2 micros and you've only got $1,500 drawdown, even if you got a $2,500 drawdown, you know, if, you know, 2 micros, you know, goes 100, 150 points against you, you know, that's a third of your drawdown, you know, right there. So there's things to look at. So, but I'm also very excited. You know, I say frustrated because I feel like it's trading is a lot easier, you know, looking at it through a different lens than what I believe even my own journey has been a struggle. And it's been more profitable than not in the long run, but but at the same time, it's not been stress free. It's not been something that I'm like, hey, this I just can't wait now till, you know, the market opens up. It's like, oh, here we go again. You know, am I ready to go? And which way is it going to go today? Um, and so it's really been fun the last couple of weeks to kind of settle things down, look at things through a different lens. And that's really what I want to share today is I want to make trading fun for everyone. And I want to kind of share a few things. I usually don't do this, but I think it'll really kind of, I guess I kind of want to inspire or motivate a little bit. So let me share my screen, and I just want to go through a few things and I kind of show you where I identified a loophole and we can get things going. Any questions so far? I mean, I really haven't shared anything yet, so I'm just trying to. All right, what are you seeing? Seeing TradingView?
Yeah, we're seeing your chart on TradingView.
All right, I want to bring up, this is just, I think I've got like nine accounts that I've been working on. And I kind of want to go show you what, I'm not trading these all at the same time. I'm not copy trading them, but I want to kind of show you where I want to provide means to, you know, if you're interested in kind of trading the range and learning how to manage a trade if you get in the wrong direction and winning a lot more than you're losing. I kind of want to show what's possible. Because here's a 150K account that I funded last week. You know, it was like 14 November through 21. And right here's where I found a loophole. And I'd actually quit trading this account for a couple days. And then I come right back and picked up where I kind of left off after I blew a couple other accounts trying to figure out what I was doing wrong. But what you're going to see some consistencies across a few different accounts, but you know, 70%, 76%, win rate. The average win, not large. It's not, 144 here. But again, we had to take it up to 9,000 to win. And then this largest losing trade, this is this right here. And that actually is kind of an exception to what we're going to go today. However, it can happen. It definitely can happen. But this slope right here is this is really what we're after. This is that consistency that we're after, so we can start seeing this. If we look at the trading history in our accounts, it should give us kind of keep us a little motivated, because this is where when you start having a couple accounts over time, you start getting some payouts. It doesn't matter the average winning trade, but these 150K accounts, I don't quit unless I got at least 500 or 600 in net profits a day. I mean, that's kind of my goal now. And I'll just kind of roll through, but here's a 25K account. And I think actually last night during Globex, I had to take it up to just around 300, but I was just messing around with it, just executing what I'm going to kind of cover today and funded it. But again, look at it's this slope right here that I really like. Just consistently, you can see the 75% win rate. Okay, largest winning trade is only $180, but when you've only got a drawdown of 150, that's 10% of your drawdown for a large winning trade. So it's actually pretty large. Average winning 34. That's not huge, but relative to a $1,500 account, it is. Average time in trade around 20 minutes. Here's one. This one's no, it's not the fun one. Here is one where, yeah, this is where I'd stop trading this one here, and this one here. I want to show this one here because this is a funded account that I almost blew up, and I stopped it. But you see this slope here now that I kind of figured out where not to jack it up anymore. And so it's continually grinding back, and I'm about back to break even, where I was almost ready to blow up a little 25K account. You kind of look at this slope here versus these slopes here. This right here is just, hey, almost over to where stop it, focused on the other accounts, figured out what I was doing wrong in this particular process, and now I'm just in it a little bit each day, and I'm back to where I've almost got maximum drawdown back, and I'll start actually being profitable in it. And I got all these different accounts. They look similar because I am trading them similar, but I also don't trade all the accounts at the same time. That's that diversity, because if you do have an issue with your internet or what have you, I mean, I've blown 20 accounts at one time before. It's not fun. And so I very seldom will trade all my accounts at the same time. But here's another account here. Again, another there'd be a 25K account. Working through that one there. Looks like November 18th to the 26th. But again, it's kind of the slope that we're looking for here. Average winning trade around 75. Largest winning, okay, 361, a little bit larger there. And I am just coming into a point recently too where, and again, it's kind of that everything we've trained on to this point, you know, that range, giving us that daily bias, you know, hey, what direction do we sense it's going to go? You know, first and foremost, let me kind of share another thing that I believe has been helped me a lot in the last couple weeks in particular is being a bull. You know, regardless of what it does in the first half of the session, just being a bull. You know, it's the market overall is, hey, once it's done going down in the day, we've had a couple exceptions, but if I'm down below VWAP and there's an hour or two left, I just don't worry about it. I'm not going to go short for one, and I'm bullish, you know, and the market ends bullish, you know, and there's a lot of data out there too. It talks about December, but larger time frame analysis, you know, I've had my biggest winning days on a big bearish drop, but I've had far more losing trades going short. Maybe that's a better way to put it. So overall, I just do a lot better, you know, being bullish. And if I can, especially with what we're going to cover today on all these trades here, for the most part, if I'm like above VWAP quite a bit and we are in a range, I have no problem shorting. I short all day long, you know, down towards VWAP. But where I really am a lot more comfortable in a trade is if I'm down below VWAP and I'm long up towards VWAP, or if it just keeps bouncing off of VWAP and I just go ahead and get in, you know, at the bottom of a range, it keeps bouncing off of VWAP and I just go long and just keep taking, you know, a couple $100, you know, over and over, you know. So keep that in mind as we look at some charts and I kind of break out how we kind of look at it. So here's another one. This one here's P&L 8,000. So here's another 150K account about ready to fund. So I'm really just $400 away from funding another 150K account. So I might do that tonight when we hang up here. Who knows? We just need $400 more, and that one will be done.
Do it now so we can watch.
Hey, we will.
No pressure.
But now it seems like a challenge. That seems like a challenge because
leave it, Jake. Leave it to
you
Julie to do that to you.
Yeah.
Go, sister.
Yeah.
I'm going to show you something that it may just cause Sean to take his hat off and just throw it in the air, because it's going to be kind of cool. Because I'm going to share a point. I'm going to share a couple examples where who cares if you get in the wrong side of the trade. You know, size is so important here and patience, but I don't even care if you're on the wrong side. Now, I say that cautiously because it's a lot easier if you get on the right side of the trade. It's a lot easier. But these 150K accounts, I very seldom, well, in the PA side on the funded, I will not trade more than 5 micros. On the evaluations, I will trade a full mini. But for the most part, if I really don't have a sense of what's going on, or if it's moving pretty fast, I'll actually just have 2 micros on a 150K account. And I'll go for 25 points at a pop, you know, anywhere from 12.5 to 25 points. It just depends. But again, just that consistency right there. Here's must be another 12, a 25K account. Again, just kind of looking at the slope, and none of these are not all copy traded. You know, there might be 2 to 3 at a time that are copy traded. And that's kind of what I want to highlight. Um, here's 8 here, another 25K. And 25K there. So I got 4 25s right now at 150, and I got a 250 and then 3 150s that I'm working through. But this is the type of data we're wanting. You know, I mean, how, of course, we'd all like to just have a positive slope on our P&L. There's no doubt about it. But here's where I'm going to be able to share a big loophole and it was just over trading and adding too much too quick when I was in it wrong. But figuring that out here in the nick of time. So, and everybody can get that from Trade-Evade, right? Your performance history. I just want to make sure you're aware of how to log in to Trade-Evade, you know, and you've got your little modules at the top left. When you click on that, there's one of those that gives you performance history, and you can go in there and kind of get a sense of how that account's been doing over time. Let's see here.
Hey, Jake, real quick. So something to point out. So when you're looking at that trade performance, that's for today, but there's the option where you can change it. So you can view, you know, yesterday, this week, this month. So just so you know, if you're looking and saying, okay, well, that's for today, but how do I know overall?
Yeah.
Just for those who don't use it, just know that there is a feature there that'll allow you to change your viewing.
It's exactly right, because the default is today when you're on it, and I will click on like this month, you know,
Can
unless
you
it's much
show
older than
us
that.
at all where to find it? I've never seen it before.
Let's see here. Okay, that should work. 'Cause everything's being recorded, so I'm trying to. It's like just everything goes public out on the internet, so I'm trying to like cover everything up. Okay. Basically from this is the DOM, and I do use the DOM a lot more. Not, it's just to fine tune, because whenever I do put an order in, sometimes I am moving it, you know, 2 points, 3 points. And I'll kind of cover that a little bit today. But here's your chart. Once you log into Trade-Evade, and did I jump ahead? I mean, does everybody know how to log into Trade-Evade?
Mhm.
Okay, so once you're at Trade-Evade, this top left, add module.
Oh,
Okay, that's really where you're going to find your accounts. You know, where, because this right here, this account, like here, if you got an open trade, well, this will be like your P&L for the current session, you know, and this is your P&L if you got an open trade. But this right here kind of lets you know is your drawdown, you know. Once this goes into parentheses, you know, basically negative, that account's done. You've blown it up. So, and this kind of lets you know, hey, here is your intended trailing max for the account. So you want this column here to always be basically what this is over here. That's the goal. Because when this becomes basically close down to zero from like 1500, well, you know you're about ready to blow that account. Okay. And that's kind of how I have this set up here. So from the modules, this accounts, let's go there first. You click on this X top left of your Trade-Evade for everybody's screen. That's just accounts right here. Okay, and you can just click and hold and then kind of drop and put it wherever you want on your screen. Okay. I really don't want that on there. This point here. I'll close this one out. So we're back to this one here, but you kind of see how I did that? So you just click on the modules, just click on that once, and this will bring up these different options. And that's that accounts. Now this trade performance is the one that we had up a minute ago. I thought I had them. Okay, and right here's where Anthony was talking about. By default, this just gives you the 1 day of data. So here's like the current session for 27 November. There's nothing in there. But if we want to click here to view performance data for previous sessions, you just here, and it'll actually bring up the screen. And then you can go in and you can go in and change, today to this month, what have you. And then download PDFs, kind of what I did. And then you can hit download CSV, actually just go. And then that'll bring up the stuff for the whole month. And that's basically what's in these right here. You just copy it right to PFD, and then it kind of allows you to see exactly what you got.
Well, cool.
And I just brought mine. I didn't know you could do that. So, or had that option. I just brought mine up and it makes me feel a little better about how I'm doing.
Fantastic. I mean, it kind of gives you that overall percentage, this and that, and
Not supposed to look like a jagged saw?
They told you wrong all this time, huh?
Wow.
oh, yeah.
Mine look like teeth. Up, down, up, down.
Well, I mean, it's kind of good to see a winning percentage. Like, if looking at mine, because I'm only, like I told everybody, I'm only trading one account right now, but I'm at 61% profitable. So I'm like, I was surprised at that, just based on the feeling when you have losing trades or a streak of them, and then when you have some winning trades. But yeah, it's actually pretty good.
Yeah, and where that really, I mean, that's kind of where that, what's where I'm looking, because if you got 61% win rate, and you win $10, 61 out of 100, but you lose $100, 39 out of 100. That's a different story. So that's where that risk to reward, combined, with that win ratio is very, very important. And that's kind of where we go back. If you look at the some of that I think we spent about 2 different weeks, or at least 1 week, where we just kind of went over the risk matrix and to say, hey, when you're consistent with a win rate, and that's where journaling is really valuable, and here's a snapshot. You can go into all your accounts and kind of get some of that data. And then you can really then kind of assess, kind of like where I kind of showed, on a couple of these accounts here where I'd really had, well, like right here was a kind of a drawdown. And I had that on a few accounts, so I had to kind of quit trading and go back to the drawing board. And I'm excited to kind of show you exactly what I was doing, because I blew, well, positively, I was really doing extremely well, for a few days until I wasn't. And I'm going to share with you exactly what to be cautious with this particular model. And again, I don't want this to be coming across as introducing a new strategy per se, because take everything you've learned to this point here, and you guys will hear me, I think a lot of times I'll talk about that VWAP, especially, I will, one of my main trades of the day, if we're breaking down, is I will stay in and target on a 1-minute time frame to that VWAP. There's just something about, we wick into that VWAP and then we get rejected, and that's if we're going to stay below VWAP for the first half of the session and most of the day. We'll go up to VWAP and then it kind of rolls over, and then eventually it'll kind of come back up. Those kind of things we look at, but what I really kind of want to highlight, that there's 3 things. Trend is, okay, do we have trend here? This is today. Okay. No, we really don't. You know, we look over, this is Monday, so this is yesterday. If we look at the US market, regular trading hours, you know, again, overall market being very bullish, you know, the probability of filling it, you know, the retest was there, you know, so this was good. But we had a couple days where we were so bullish with this gap that we only did not come down to the gap that same day. It only come down about halfway, and then it took off and went bullish. And so that's what caused me to be cautious. But yeah, we come down, and not only did we fill the gap, well, we just kind of basically filled the gap really well, and come down and retested some of these lows here. But again, it's like this wick right here to VWAP. Once we started getting some higher lows here, I was very comfortable, you know. So this was my main trade of the day, was actually knowing we'd come up and wick into the VWAP, you know. And then I wasn't worried about being bullish because of these wicks right here. I wasn't worried about staying in all day long up there. I mean, I actually had a target set. I went through the VWAP, and I'm like, okay, I'm profitable on all the accounts that I had at the time, and I was good to go. So now it's just like, okay, what does it look like for the rest of the day? And here's an example of what I'm going to take us into today. I don't know where I've got that. I want to kind of show a picture and see if I can do it, because I'm just going to show you exactly what it is up front, and you'll know what I'm talking about. But here's yesterday, and this is prices going down, right? So I'm in it the wrong direction. I buy here, it goes against me. I'm DCAing, I'm just buying again. Okay, I get out here much lower than my original entry, and I'm up $200. I'm up $100, excuse me. This was these were two 25K accounts. I just had two accounts going at the same time. But I was looking at getting in at the bottom of a range here. I was really expecting things to go up. So these are two 25. I'm trading one 25K account, but I was copy trading two accounts. But I get in here long, it goes against me. Okay. Only one micro. No. Yes, I think I only had one micro here, one micro here. And this is the key. We're DCAing. Okay, Apex, they open the door saying they don't care about DCA anymore. Okay, that's number one. Number two is what they've added is, hey, there's going to be some flags in the system, you know, if you start having drawdown more than like 1/3% of your starting balance at the beginning of that day. So I'm just kind of reiterating, those are some recent changes with Apex. And so that's another reason small size is key. But this is a 25K account. I get in here thinking this is a little liquidation, and it's going to take off and go up, back up towards VWAP. I'm like, hey, I'm below VWAP. Overall market's very bullish. Man, I'm as good as Esley. It rolled right against me, kept coming down. This is one micro on a 25K account. I didn't care. All I was waiting for was, where am I towards the bottom? I was thinking that here with this beautiful wick coming, because it actually dropped pretty quick. I'm like, hey, it's going to reverse here. So I went ahead and added just one more micro. So now I'm in two micros right here. Okay. Now my average entry price is literally right here in the middle, because this happened to be the exact same size that was here. Now, if you add another one here, you're not going to have quite that big of a move on your average entry price. But one micro there, the average entry price is in the middle between the two. Okay. So now what do I have to do to make $50? I only have to go 12.5 points, because I've got two micros at this point. So if my new entry price is actually here, I also move my target down to where it's just a solid $50 is all I want in the account. $50 is all I want on the win. I got VWAP up here. We've had a good pullback, but now my entry price is in the middle. And then I move my target down with my new entry price, but I systematically move it. I use the calculator. I'll share that in a minute. Any questions on this? This is just dollar cost average 101.
Jake, can you walk us through on the DCA? So let me just be clear. So you had an entry where you believed we were going to be bullish, not the case. So when did you, so explain to me then, how did you do DCA? You entered another micro in at the bottom?
Yep. I'm gonna go see if we can't find that location. I think that was Monday. This is where we gapped
I have a
up.
question too when Anthony's done.
Okay.
So do I.
All right. Yeah, here we go. Here we go. I think it was right in here. So let's go. I'm long. Let's just use this one right here. I'm long. I see this wick come in right here. I think this is about where it was. It was around this wick right here. So this wick comes in, bounces up above the 100. My VWAP's up here. It went right against me. Might have been right in here. Wish I had a good
Well, I guess just looking at that chart, I mean, I guess because I've got this same problem of I'm holding the losing trade too long.
Yeah.
And I don't trust the winning trade, so I get out early. So,
Me
so
too.
one of the things to keep in mind, winning percentage is great, but start looking at what's my biggest loss and what's my biggest win. And if it's not proportional, because one is you wait too long and the other is you don't wait long enough, you can be 80% winning and still blow the account.
What's your size when you're holding too long?
Well, I'm doing 2-to-1, but my problem is that
How do you blow an account, even a 25K account with one micro? When
well, I
it's
guess if
the overall market is bullish and you've got a $1,500 drawdown, and that's kind of what I'm getting at is the key is to maintain that high win rate. Keep your maximum drawdown up. That's your baseline. Because if you got, a 50K account or 25K account, one micro, and my 50K accounts, I will start with 2 micros, so I got $2,500 drawdown. But I run the simulator, I've practiced, I do all the eval accounts. And once I learn to not add DCA too quickly, I'm like, just let it run, because I almost want it to drop, because I'm like, crap, I was in it the wrong way. The further it goes against me, the lower it brings my profit target back down towards, because what is our price doing here, Anthony? And this is what's key, is it's coming down, it's going up, it's coming down, it's going back up, it's coming down, going back up. So it doesn't matter where we get in, we get in here and it goes against us down here. Well, half of it's right here. Price comes back up 50%. And that's the key. And if we add again down, well, every time you add below your entry price, you're actually bringing that down. And the key is to have the right size, and this is where, not having, a mini, 10 micros, what have you, is key. And just rinse and repeat, on a 25K account, rinse and repeat $25 wins. Because now we're talking, you're going to win every time. Now, I hate to say that. And I took a loss today, but I'm like, I could not quite recover before FOMC, and I was not going to be in. So I took a small loss, and then as soon as I found out it was a nothing burger, 3 trades later, because with my larger accounts, I will have $100 targets. So every time I win, it's $100. Okay, I may be down $300-400 at any given time, and then I'm still gonna take that profit at $100. Unless we're in trend, well, I'm still gonna take it at $100. I don't mean to shift gears on you, but if we're in a trend, I'm still taking $100 wins. All I'm doing is, at the same time my take profit is set to maximize my drawdown, I'm re-entering the trade 1 tick above where I'm taking profit. So I'm sacrificing a tick, not a point, a quarter of a point or 1 tick, to get right back in the trade if I feel it's trending. And then on a good trend day, I'll actually be able to even get in on a pullback versus skipping a tick every $200. We'll go into that. We'll go into that.
Yeah.
But here's what do we got going on in the market? Which account? Because here's what's fun. This one here is about ready to get funded. So let's go into that one right there.
I was just kidding, Jake. You don't have to do it live.
Well, I wanna show. Of course, we're gonna look at the market, but
He's gonna blame you anyway, Julie.
Right? I'm gonna tell mom.
Exactly.
um,
She made me do it. Yeah.
Like you have siblings.
Yeah, I did.
all right. This is an eval account, but here's what's going to the electronic, because this is what kind of makes it fun, and hopefully we got enough volatility.
You're about at the top of the hour, Jake, if you want to wait like 3 minutes.
4 o'clock, so that's about 8 o'clock Eastern Standard Time.
Yep.
Trying to figure out I want to show the math play out. Let's just go. I'm gonna go back to that place where we were.
Well, this may or may not be a good time for me to ask my question, because that trade of 8 chart that you showed,
Yeah.
did you have a stop loss predetermined?
I do, but I put it way down. So I've got okay, so most of my entries will be like 12.5 points. And then with my stop loss is like around 400 points. I want it just out of the way. So I've got a mental stop loss.
Right. Okay, that's what I was wondering, because I didn't see that on your chart. And
Yeah,
I know your target you just said was like 12 points, 12 and a half points, something like
yeah, it
that.
depends on if I'm trading. Well, a lot of times it'll start out at 12 and out. Like if I got 2 micros, 12 and out points, that's $50. If I'm on the 150K accounts, then a lot of times I've got 5 micros, and then I'll go about 10, and I usually like 10 and a half points, because I just like to cover those fees with and have a round at $100.
Yeah.
And then my stop loss is generally about 400 points below it. I got it out of the way.
Right.
Because that
So you weren't anywhere near close on that trade of 8, even though it went against you pretty far.
Right, right. And with the one micro and not adding just, because that's where I messed it up before. Here's where I jacked things up is I was looking at DCA and I really couldn't blow an account um, for a small sample size. And what I mean by that is I was just setting DCAs up where I was adding about every 10, 15 points. So if it pulled against me like 10 points, I would just add another micro. It pulled with another 10, I'd add another micro. And then it would go back up 50%, but I would adjust that take profit, to where it was $50 to $100 take profit every time I won. That would come down with the new entry price, the average entry price. Well, what happens is if you add too quick when you are in a trend, because now we've had these 15-minute candles, 5 and 6 in a row. Okay, if you get into one of those trends, and if you're DCAing wrong, you're going to lose. You're going to expose yourself too much, and it goes right in exactly what Anthony was talking about. It's like, well, how long do I hold on to it? Well, if your size is not correct,
Get out.
put yourself in a very bad position. So the secret is I don't even worry about a DCA if it's going against me wrong until I know I am at some new support. If
I
I've
can't
got a
remember
high
what
probability
DCA
it's
is.
going to reverse, then and only then do I add another small size.
Okay, that's what I just couldn't see on the picture was like, how did you know? Well, you didn't because you ended up adding another contract and it went against you even farther. And you just literally just waited for it to reverse to go up and get your profit because you knew it was going to reverse eventually.
It will.
And with one micro, you're not worried about, you're not going to blow an account. You just got to be patient.
Jake, I thought you couldn't dollar cost average.
Well, that's why Sharon with you, Apex has come out and they have removed that restriction. You
Oh.
absolutely can.
Oh.
Yep, you can. And that's the only reason we're having this conversation here. Well,
Oh, that's big.
even if evaluation accounts, you can DC all you want. You always could.
Mhm.
But we don't want to sit there and fund accounts over and over without a plan to go in and be able to maintain those funded accounts. But Apex has come out. DCA is no longer an issue with them. But what they've
And a
added
live account,
on a live account,
it's fine too.
absolutely, yeah,
Okay.
they no longer have a restriction on DCA.
Mm.
But what they've added, which is somewhat frustrating, but it shouldn't be. And again, that's where even with these larger accounts, having the right size is they do not want to see more than 30% of drawdown from your daily balance on any given day.
Mm.
So you start having 50, 60% drawdown regularly in your live accounts, you're going to get warnings. And they may even
isn't
delay
that-
a payout.
I thought that was per trade. That was 30% per trade, not for the day. That's the 30% rule. So
It is for a trade, but Anthony, I do believe when they break it out is when you're trading that day, hey, here's your starting balance. And if you're in a trade that's taking you below that 30% drawdown for that day, then you need to manage that trade. Yes. But it's,
okay,
yeah, they don't want to see that 30% drawdown. Like, hey, if you go to 35 and then you fix it, they're like, hey, that's not a big deal. But that particular trade that's taking you over 30% drawdown for the day, that's the trade that they're saying, hey, you probably shouldn't be doing it. You probably should stop and come back another day.
yeah, see, I thought it was 30% per trade because what they didn't want to see you do was say, oh, well, I'll just take let's just say if you're on a 50K, I'll just take my stop loss to 2,500, knowing that at some point it's going to reverse into, what I thought was going to happen. What they're saying is we don't want to see that because that really is then just gambling. I mean, what goes down does come up, and what goes up comes down. And
Yeah,
so,
you're exactly right. However, I also equally confident that
uh-huh,
they're wanting to see that discipline. You know, if you're below 30% for that day, hey, if you do another trade, it needs to be to get it back above that. In other words, they don't want, in other words, if you start ending at 50 and 60% drawdown, you know, a couple days in a row, they know that that's going to set you up for failure. You're most likely going to blow the account. So the overall intent is so that
uh-huh.
you are alive to trade another day. But you're exactly right. You know, don't load up on that one there, you know, because of below 30%. But it's like, hey, that they're looking at how can you, because what they're not doing, which I kind of like, is other prop firms, you know, Top Step, they just kind of went away from it, but Tradeify is that same way, where they have locked in drawdowns, usually around 50% of the account, and you cannot trade anymore that day. It will liquefy you that day. And then you can trade the next day.
Hmm.
And Apex is just encouraging their traders to manually, hey, understand 30%. And that's kind of what we're looking for. We don't want to see you have your account balance go below 30%. And yeah, it's going to be that particular trade, but they don't want to see 30% and then another 30%. The next thing you know, you're at 90% in the same day.
Michelle had a question. DCA, Michelle, is dollar cost averaging, is what that stands for.
We're going to
Thank
go
you.
into kind of set something up here, see if we can't show an example. Let's say we're looking at getting in maybe here somewhere around this VWAP, okay, right in this area here. So let's move it forward one candle. It's like, ooh, I like that. Nice little move right here. I'm at support. I'm going to go ahead and buy. I bought me a micro. I'm going to go long, expecting to come back up, you know, maybe target, you know, we're already like, here's VWAP right here. So we could roll over quite a bit. I'm not going to remember. This is Monday the 25th, but here we've got one micro. Okay, we'll just kind of play it forward here a little bit. It's kind of going against us. Nice little candle wicked in right there. We're up $4. And for the most part, if we ever see this, we'll say it's a 25K account. If we ever see this go to like $25, we'll say, hey, we hit our target. Because again, this may sound crazy, but I'll sit down now and say, okay, I'm gonna do 5 trades. And I'll sit there and I might trade for sometimes it might be 30 minutes, it might be a couple hours. It depends. If I get in the right direction, it's quick. But if I'm against it, if I get in the wrong direction, then it might be a couple hours before I get out. Of course, I don't sit here the whole time, but I'll just let it go against me as long as I got the right size. But now I might sit down. It's like, hey, I'm going to do 5 trades. And if it's on a 25K account, well, that's $125. You know, my goal on a 25K account is really $150 a day. That's all I care about. Because that maximizes the payout, you know, at least, you know, of every 10 days, not every 8 days, but real close to it. So, but 10 trades sounds like a lot. And that's a paradigm shift in our thinking. You know, it's like over trading. But if I'm maximizing my payout and every time I sit down to trade, if I'm winning $25 to $50, if you got maximum drawdown on a 25K account, 2 micros is probably okay. I had to bring them down from almost a zero balance all the way back up. So I'm just really, really cautious on these small accounts, and I don't even get the small accounts anymore. I'm kind of tired of them. So they were down 84, 1 micro, and we're kind of looking left, and this is where you kind of want to look left. I've got 4-hour resistance or support here, and then clear down here. And this is where you got to kind of ask yourself am I comfortable to stay in the trade all the way down into something like this right down here? And this is where you don't add until until you actually are at a good area of support and expecting a bounce back.
So
And it's
you got to be comfortable to lose that 200 points.
Say that again.
You got to be comfortable to lose that 200 points on one.
You got to be comfortable to lose that 200 points, but what's equally important or to realize is if it comes and goes against you 200 points, it's only got to come back to 100 points for you to be at break even. I mean, that's a paradigm shift.
That's if you add a DCA. If it just drops on you.
If it just drops on you, and you don't add, with maintaining maximum drawdown, I've yet to be able to figure out how to blow an account. On these larger accounts, I can actually have a mini, and if I don't add, it goes down and then it comes back and then I add. When I add just 1 or 2 micros, I've yet, again, my sample data is about 8 accounts and in just a couple weeks, but I can't put myself in I haven't been able to blow an account yet.
I have a question.
Yes, Michelle.
Okay, in this demonstration you're showing, I don't see like your stop and your target. I think that's what Julie was referencing. Are you doing this with just mental models in your head and you know where you want it to go?
Yeah, I am. We could, just kind of for the sake of time, we draw it here. My stop's clear down here for one. I don't want it in my way.
Right.
My stop is really, and here's another thing is, see, here's my different support levels. And again, I'm kind of looking left. And what's our overall time frame? Our larger time frame is we're in a bullish market. Okay. I don't want my stop in my way. I'm dealing with a micro and I've got maximum drawdown. But just for the sake of having it in the system, I do want to be able to grab it and drag it up. If something goes crazy. I entered at the top. I wasn't paying attention. I stepped away for a little bit. I come back. It was 11 o'clock Alaska time. I forgot that there was significant news. I'd set up all my entries. And as soon as I hit enter, 150 point candle come in and just DCA, 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 DCA. I'm like, well, that's interesting. Well, it was about 15 minutes later, I was back up to about 15% retracement of that candle, and I'd made $100 off of that. And I was just kind of like, that's interesting. I'm not saying that was a wrong. I would never do that on purpose, but that was me getting lazy. I'd stepped away. I wanted to come back. I was like, hey, I'm going to make me another $150 here the next few minutes. And I'm not used to having FOMC or some type of news, at 11 o'clock Alaska time. Generally, it's 2 p.m. Eastern, but not 3 p.m. Eastern. And so that's another thing is it went through on my old way of doing it and it filled me up too quick. And so my drawdown sucked. It was actually around 1,300 on a 25K account.
Woo.
Absorb it and it come right back. And then I'd made $150. That's the wrong thing to do. And it's a paradigm shift. It goes back into Anthony's concern. He's like, hell no. He's like, I don't like to see they come down. But if you've got 1 micro right now, we're $74 in the hole. That's not that much fun. But our entry price is clear up here at 974. We want to see a confirmation of support before we even think of really adding another micro. Okay, we took out the Globex low, so that kind of like, dang, this could be a bearish run. We don't know yet, but I've got key support here and here for 4 hours. So I really am interested in adding down here if price comes down into this area or here, but I'm not in a hurry to think, okay, if I add here, I got indecision candle, I've got a bullish hammer. All I've got to do is come up to here to break even. That's not worth my time. I want to have a confirmation that I'm hitting the bottom. And if it comes all the way down to here, so what? I'm okay with, $300-400 drawdown with 1 micro. The larger move I have away from my entry with the right size the easier it is to make a profit because I only got to come back up halfway from wherever I add. Okay, this will be fun to do on paper trading. You know, and it's, I'm no longer really doing math either. You know, we're looking at support and resistance, and then we are, as our entry price, notice, let me go ahead and put a line up here. The original entry. Let me make sure we've got that marked so you can kind of see as it changes. Lock that there. Because when we add down in this area, if this is that trade, you'll see this entry price is going to jump down to about here. Okay, but our stop is in the system. But like I said, by default, I've usually got about 400 points away. So I've always got the stop in there, but I don't, it's not part of my trading strategy. My risk, this is what's crazy, is the risk is the account. Now, and that sounds stupid. Why would you risk the whole account? Well, I'm not really risking the whole account. Because once I get around 50%, I am done in a funded account. I'm not, because I can, 9 times out of 10, I'm going to get back to where I was with the win rate and utilizing this strategy. But the way it's kind of taught is, hey, you're taking profits so frequently from the accounts, you're paying yourself, you've got 4 or 5 accounts. Those 4 or 5 accounts, 95% of the time are doubling over time. It's going to finally happen where it's going to run against you if you just DCA. And so you're going to have that one account, which is from your overall risk plan, you're risking that account and you're okay with that. So you have to be okay to be able to go into that deep a drawdown on maybe one of your 10 accounts. And that's another reason you're not going to trade all 10 accounts the same way.
I have
Jake,
one
are
more
you-
question.
Oh, sorry, go ahead.
Yeah, go ahead, Michelle.
When you're doing the DCA and it goes down and you want to add, are you just inserting a new buy? You're
Yes.
not adjusting what was already there. You're just putting in a new buy.
I'm just putting in a new buy. And then the system is showing me where my new average entry price is. I will manually go in and also lower my take profit because I'm not at all interested in having to come clear back up here as a take profit. As my entry price moves down here, I'm just looking at being profitable on every trade, either $50, $100, or $200, depending on which accounts I'm trading.
That's brilliant.
So
I don't
how would you
I'm not
adjust
locked
the,
into this VWAP anymore up here if it goes against me. All I am saying, hey, I'm going to end this trade profitable, period. I got in the wrong direction. It went against me. I don't care because I'm going to end it profitable because I have the right size. And I'm nowhere coming near blowing the account by the time it does decide to turn around, even if it does move clear down into this area.
where does the system show you the average?
Okay, so here we are going sideways. Right now, my average entry price is, and I went in and put a line up here, so we'll be able to see it, Michelle. But right now, we're gonna try to lose on this trade. We got in, at our 200, 1 micro, and we'll say this is a 50K account. It's going sideways, and it's going against us again. Okay, it's breaking through this area here. Here's some key possible resistance over here looking left. So I'm not in a hurry to add here yet. But I need to see if my larger time frame analysis, if this is hold support. So I would be interested in maybe getting in around this yellow line to this purple line. But I'm not going to until then. I have no bullish. All I did was get in the wrong side of the trade. I figured we'd bounce off of this Globex low. Everything's bullish. We bounce back up. I was wrong. It did not happen. So I'm like, who cares? I'm drinking coffee. It's like that kind of stinks. It would have been easier if I would have went bearish here, but who cares? It rolls back down. I'm like, cool. It's kind of coming back up, and it's tempting to get back in there because how much quicker, you know, if I would have DCA'd right here, my entry price would have been here. You know, and so I at least would have broke even, but would I have made my $50 or $100? And I am just a little gun shy. I've only got one push down. We got a little retest, rejection at the 10. We got another push down. I got a little rejection here at the 20. So I'm still trading just like I was bearish in a sense. Hey, what direction is it looking? I don't have anything telling me it's reversing yet. If it was reversing, it come back up here and hit my target, awesome. But I really, it did not. Now I'm back below that. I want it to go a little bit lower. I mean, I could get any place here. We got some higher lows. Okay, I think it rolls over, but let's add one here because we're still not exposing ourselves too much. So let's see what happens to the price. I mean, we're trying to lose is what we're getting at here. And you're going to find out how easy it is to win. So we're at 974.50. We're going to go ahead and just add right here. And I'm always going to add on a pullback anyway, not at a higher range, just add one here anyway. See how I've got doubled my load. And I'm exposed. I've got $107 drawdown. Here's my original entry up here. Okay, I've got 2 micros. If I go 12.5 points, and so let me show you another tool that you all have that I have up at all times. I'm bringing it up real quick. I have it up at all times and I'm bringing it up real quick. I sound like that. Okay, so we jump over to here. And if my goal, depending on the size of the account, is $50, and now I've got 2 micros. All I'm doing is I'm on the NASDAQ, points per contract. So I need 12.5 points above my new average entry. That's my new target. And everybody has this calculator, right?
Mhm.
If we add another contract, all we're doing, we only need 8.5 or 8.25, however you want to round. That way, I want to win every time. I'm not going to waste my time and break even. I'm going to win, depending on the account size, $200, $100, or $50, depending on the account that I'm trading. And so I will use this calculator just hastily. How many points do I need based on how many contracts do I have at that point? Sean, you had a question a minute ago.
Yeah. Are you doing all these entries when you're DCA? If you get into that mind frame, once the trade goes against you, are you doing it all off the 1 minute?
I'm doing anywhere between 30 seconds to 5 minutes. And to be honest, I am spending a lot more time in the 15 because I want to be able to articulate. We may not get it this week, but the power of what happens on these 15-minute candles. Like here's a range like last Friday. Okay, if come in, we kind of get a pullback. If I can get me 12.5, 20 points on this 15-minute candle, when I kind of bounce off here, somewhere within this 15-minute candle, can I get another 12.5 to 20 points? I get rejection up here. I've got another 15-minute range. So this is part of that range discussion I really want to have, is we want to keep our eyes on what's happening on the 15-minute time frame, especially as we get into fair value gaps. Because if 15-minute candles like this candle here, look at this wick. This wick preceding this 15-minute candle is clear down here. We cannot make a higher high here. So what is the probability that I just go short anywhere here and I can get me anywhere from 10 to 20 points? Plus I got a potential to come all the way down to this wick. So here's my area from 837.25 all the way down to 792. If I can get me 15 points targeting a fair value gap, I'm doing 10 to 12 of these every day. And I'm utilizing really the larger time frame analysis of 15-minute. And I'm looking for, depending on the size of the account, but I'm looking for that 12.5 to 25. I start with 25 points in some cases with one micro. Once if I have to DCA, then it becomes 12.5. And if I add another one, then it's like 8 3/4. So you can kind of see how I use that calculator. But this is that range that I'm talking about. So we've got a lot of stuff to go over. There's no trend here, is there?
Mhm.
Okay. Now, if we look at Friday, 22 November, go to a 3-minute time frame. You know, the best we could do on a day like this is, I mean, here's our first 10 EMA. And again, we need to learn as traders that, hey, do we really want to get in at the upper part of a range? I'm learning, no. Now, if I do, I could get in here. I don't maybe get a full R. If I stay in above this breakout, it rolls back against me. Not a big deal, because if I come down here and I add, if I entered above here and ended up adding off this nice little bounce off of the 10, well, then I'm very profitable by the time it gets back up here. I mean, again, you can literally flip a coin, decide which way you want to go, long or short. And if you have the right size and DCA correctly, you're going to win 95+% of the time.
Mm.
That's phenomenal. That is going to take some practice to get that in your mindset. And that's one of the reasons I want to show you those PDFs, because I'm not trading all those accounts together. But I sit down to enter a trade now. I don't even blink. The key is do not add until you're at a reversal, at least what you think's a reversal. Because even if it's not, you add, well, wait for the next one. Let it go against you. Don't panic. But you can flip a coin.
And I do the same as what Anthony said. I panic too quick and I get out too quick every time, almost every time.
I've been doing that for the last 2 years.
Drives me crazy.
It drives me crazy. And that's, you know, I kind of went back to the minis and I was scalping a little bit. And then when they opened up that DCA, and then I did come across another, a couple of the videos, and it was actually a Forex. I'm like, what the heck? It just, I had to transform my thinking. And so I went in and I've tried to blow up accounts, tried to figure out, okay, and I did. I was very successful. And my problem, my problem was as I was adding too quickly. But now I've had a couple days where it just completely went against me wrong. And I'm like, I like the size that I've got. I really like it. And then I added too early. Again, just a second micro. And these were just 2 funded accounts, 25Ks. One of them I've been trying to salvage. And I'm like, I think I'm okay. And it was yesterday. And then I was done with $300 profit with a $1,500 drawdown with those 2 accounts with the DCA, where all my other accounts I didn't DCA. I'm like, I'm above, you know, overall market's going to be bullish. It's going to come back at the end of the day. So I had evaluation accounts and then one larger account where I just sit there all day and wait for that $50 profit. And it did, but it was that power hour, you know, by the time. So all day long, I sat there, my hands tied. I couldn't do anything. And I don't think there's anything wrong with that. You know, there was such a high degree of confidence, like, hey, where I'm at, things pulled down, but we got power hour. I'm down way below VWAP. You know, I'm not going to, it goes back to Anthony, your point. We don't want to stay in that drawdown. And
Are
it
you talking power hours, the last hour of the market open?
Yeah.
Yeah.
Yeah. And in this bullish market, you know, generally you can expect at least a move back up towards VWAP. you know, if not even higher, you know, as the session comes to an end. You know, and I had enough reasons too. I mean, I was getting higher lows. You know, I just wasn't willing to DCA more yet because I was so surprised of how bearish it was in the first part of the session that I went ahead, because I did have a copy trading on about 5 accounts. I went ahead and left those alone. And I was profitable the other day on every one of them, but I was a lot more profitable and in and out on my funded accounts by just being able to add that one extra micro, you know, and a good pullback. And then once I hit my objective for the day on those, I was done. So my funded accounts were done early, and then I just had to sit there and watch and wait for it to kind of grind sideways and slowly work its way back up in that last hour of the session yesterday.
Do you
To me,
think
that
part of
was
the key to
that was
this?
worst case scenario, and it turned out really well.
Do you think the key to this is a small size?
It is.
The 1 micro?
Yeah, well, with a 25K account, I think 1 micro works pretty good. I do a lot of 2 micros if I know I got a good range,
So I have a 50K.
and if I feel like things are just bouncing off of VWAP and then kind of going up on a 25K, I'll use 2. On a 50K, I would go 3 or 4, and I would start with 2. Start with 2. Your first ad would be 2 more, taking you to 4. That's how I set up my copy traders. My 50K, my 25K accounts will have 1 micro. My 50K will have 2. My 150Ks will have 4. And then my 250, I'll go up to 5.
What's your favorite size account?
I trade the 1 25K account, and I just keep my eyes off all the others.
Good stuff.
Yeah.
So we summarized a little bit because I like the idea of it's what you're saying. When it turns against you, either direction, whichever way you've gone for the day, what you believe it's going to be at that point. So you're setting up for a regular trade, say like a 1.2 or a 2, like a 5 ORB or a 10 EMA. And then once it goes against you, you're going to use the DCA to get yourself back out of that hole. And you're going to push your stop down. So it's not, like you said, in your way. You're not watching the stop. You're watching for those support levels to hit the DCA and then get those points back and that dollar cost average. And then, you know, I see where you're coming from, but I just want to say to make sure we're still setting up for a normal trade like we normally would in our normal strategy. Is once it turns against us, we're figuring out a way to make it go positive for us once it's done that.
And that's right. And when we go to the stop conversation, I'm letting price action do what price action is going to do. It's going to move around. There's nothing worse than to get stopped out of winning trades. I would rather manage the trade and make it profitable than to predetermine where I think it's not going to go, and it does half the time, and then it stops me out. Or if I got the right size, you know, I've got 4-hour support and resistance. I shouldn't be surprised if price comes down to here. I shouldn't be surprised if price comes down to here. Does my size allow price to come down to here? If my size is going to blow that account before it comes down to here, then I've got the wrong size.
I have a question on that, Jake.
Yeah.
If you were setting up to do a regular 10 EMA trade, and TradingView says for your stop, your size, you need 4 micros for your 1.2R, then that wouldn't be a good idea. I
No, and we're trading a little bit different.
Right, and that's what I think it was Sean that was talking. Say you're setting up for regular trade.
Oh, okay.
I don't think it is, because then you're
Okay.
starting with 3, 4 micros, because that's what TradingView told you to get to 1.2 with that stop. You can't just drop your stop way down and DCA your way back. I mean, because then you could be really digging a hole, if I
Right,
understood
yeah.
correctly.
Yeah.
Yeah, I think for me, when I'm doing it, again, I'm only trading 1 micro at a time. I don't think I looked at my chart in all the last 13 trades. I've just done 1. So like you're saying, Jake, just stay at those lower levels until you figure it out, and don't I'm not saying discount what TradingView is saying, like Julie said, is to your size based on your stop and your profit taking and all that good stuff. But this is kind of an addition to the strategy. Give the price action room to move, push your stop down, keep it at your 1 micro or 2 or however you're doing it, and then figure out the DCA as it turns and goes whichever way it's going to go.
Yeah, that 10 EMA, that opening range, I'm still looking for that to start the day, because that is my bias for the day. And then I will target, like that VWAP, or I'm going to go for that 1.2 or 2R. If I don't hit it, I don't care. And yeah, I don't have the large size where I've got the full $500 R anymore. I'm going for, if I get 1 micro and if I get 50 points out of that, that's pretty darn good for a micro to get 50 points. Because then you think on Rhonda's 50K account, well, that's 2 micros.
Mhm.
You look at Anthony's 150K account, that might be 5 micros, might even be a mini. I mean, he likes 20 points, with a mini. He does that twice a day. He's happy. That's what a strategy like this, and when you can have the confidence when you're in a range. I mean, that's the beauty of a DCA and not getting in too quick. If it breaks out of the range the wrong way, it's going to break pretty hard. But how many times do we break out of this range here? It comes down. Well, a retest to the bottom part of the range. That's where I'm taking my profits. I'm taking my profits lower than where I entered. But if I get in, I think, because this is actually where I think I got in yesterday. It wasn't clear up here, but we'll let this one play out anyway. I was at this range here thinking, okay, I got range. I got room back up to VWAP. Well, she rolled clear back, I think, down into here. I loaded up here. I added one here, and this is where I actually would have had 2. And then she still kind of kept coming down a little bit more, and then she turned and went back up. But when you start looking at how many different 10 or 20 point moves you have in a range on any given day, they're 70 to 80% of the market is ranging and not trending. And then, but again, that's where I am cautious. I love the minis because it's like, hey, if I'm right, I'm in and out. I'm done quick. However, on a 25K account or a 50K account, a mini can put you in a bind if it does go against you. I mean, 200-300 points. And if you happen to add that 150 at support thinking it was going to bounce, and then it goes another 50 points, that 50K account could be done.
Good
But when
stuff.
I guess what I'm trying to get at is when you can just sit down at your computer at any given time and know that, hey, hey, is your time, do you think you're worth 75 an hour, 50 an hour? Just as a side hustle. If you sit down and you say, you know what, I'm gonna make me an extra, $50 on these 3 accounts. So that's $150. Kind of treat it as a little job or a little side hustle. But you've got to have a system that is going to do that over and over for you. And understanding how often the market ranges, and if you got the right size, these liquidations, who cares? I'm not putting stops in there. I'm not worried about the broker seeing my stops. And again, I don't know if that's true or not, but it's like I've got it down there out of the way because I got the right size. And I'm like, hey, I'm just going to make me another $100 before I go have dinner.
Mhm.
But it's a paradigm shift in our thinking of putting that stop below a recent valid pivot point. You're going to get stopped out. For $184, where our goal was to only win 50. And that's another problem that I've got with so many of the different snipe strategies that are out there. Even with a 3-to-1 stop, I'm like, no, I don't like it, because one time I hit my stop, then it's like I got to win 3 more to break even. I'm like, it's just not how I like to trade. And then because I see over and over that the price does return back near center. But if you're sniping with too large of a size, then you can blow up an account way too quick. So what this does, it allows you to, because then within a range, the goal is you look at getting in, once you identify a range, you get in the bottom, you take profits up towards the middle. You get in towards the top, take profits back towards the middle. You know, and if you get in and you go short here, it goes against you. Well, it's going to come back and retest it anyway, half the time, 9 times out of 10. If you get in here at the bottom of it, it's going to break away. Well, it's going to come back and retest it before it continues rolling over. That's all we're doing. So this real world trade, as I looked at the support here down the bottom, I think I got in here yesterday. So we're in a lot worse position here, but just watch how it plays out. If it's the one, I think it broke. I mean, here we're about ready to win. Yeah, so I tried to lose and see how we did it. We hit that, Michelle, if you've seen that, how we, for a quick second, we had $50.
Yep.
I would have had to take profit and I would be moving that down. When this, from this green line right here, actually I could have, this is 947. This would have been at 12.5 points, would have been like 959, 960 and a quarter. So 960 and a quarter is where I would have actually had my take profit. And you see that line right there? I would have wicked into it right there. And then this trade was a winner.
So you're setting the profits and the stop loss just further apart so that you have a chance to be in control and move them.
Yeah, I got my stop automatically like 400 points away. I do not want to get stopped out of the trade. I'm going to manage the trade until it's profitable. I'm not going to add to the trade until I know I'm at support. And here I'm going on memory, but again, when we're looking at, we're below VWAP, overall market is bullish. That's another reason, didn't hesitate to get in over here. But it did go against us. You know, we added when it hit this support down below here, and then darn it, I was hoping it would come down into here, but I hit my profit already. So let's just let's close this out. And we actually had $50 right there. We've seen that wick into there, and that's where we are here. But now I'm going to go ahead and buy again. I think I'm bullish. Okay, we'll move our entry here. Down to that right there. So we got a reference where we started. And then again, our goal here is going to be, we'll say 25 points. So we're going to go up to 976.25. You see where I'm getting these numbers? I'm just looking at my entry price over here, approximately 951. I'm adding 25 points. Because with 1 micro, that's $50. So 951 plus 25 takes me up to like 976. Any questions on that? No. So that, instead of 1.2, Sean, we're kind of coming out of a range. We don't have trend yet. You know, I mean, here's a bear candle, I guess, kind of closing, you know, above the 10. So we could go traditional trade, and there's actually nothing wrong with that. Absolutely nothing wrong with that. Meaning, we come in here, get in above this bear candle. It's just the idea that, what's your risk? You know, you got 1 micro, you know, is it going to be $100? Is it 50? You know, going for 1.2. I mean, it's the idea that I don't want to stop in there. So there's my 1, and there's 1.2. 1 micro, $50. I'm not going to get stopped out here. Not when I've got very possible price could come clear down to here.
Yeah.
But to have your eye on, hey, like if this was VWAP, like this wick right here, if this particular trade here, if I was decided to get in down here towards like, hey, I got some lower highs, absolutely, instead of $50, I'm targeting that. That's my first trade of the day. So I'm taking my 1 micro. If it goes against me is where I'm adding. If it doesn't go against me, well, now I got 2.45 times $100 or $50, whatever it is. That's actually pretty darn good for a 25K account with a $1,500 drawdown. But that way I'm still utilizing, I'm taking advantage of that, hey, that move of the day, play of the day. I want that biggest move. I've got 10 EMA and I'm going to go up to VWAP. So this first 1 or 2 trades of the day, I don't just set up for like $50. I will generally play those a little bit longer. Once I get this rejection here or something starts going against me, then I'm coming back to okay, now I'm going to go to trade management. I'm going to make this trade a winner, period. If I can get all my trading done in this one trade, where I'm getting $50 3 or 4 times on this small account. Well, this is $100 on a 50K account, 2.45 times. Okay, it's $400, 2.4 times on my 150K account. So this trade right here is done. I'm done trading for the day with our old trading strategy, which is the goal. That's the goal. It may not be 5 micros on a 25K account because I want to stay in and be able to, I'm going to win my trade every time. That's the goal. I don't like losing trades. And that's why my stop is out of the way. I manage until I win. I still use my larger time frame analysis, support and resistance. These are where the decisions I'm making to where I'm going to add. But I'm going to win the trade, period.
Yeah. Another question, please.
Yes.
It seems like in the past when I've tried to put on 2 different trades, they kind of collided, maybe because I had stops and targets too close. Like you're talking about, you stretch them out. But if you have that in place and you add to it, if they somehow overlap, if you end up with the target on the other one, you're just using a buy without the stops at your DCA. Which stop and target is it following on which trade?
Yeah, it's a great question because depending on the platform, with Ninja, I will have to go in and delete my targets, change the size, put a new target in there. Same thing with the stops. The entry price will always be an average entry price, and however many positions I've purchased, there's only one entry price, and it is an average entry price. The same thing on Tradeovate, and it's the same thing on TradingView. The management based on the platform we're executing our trades on is it may give you different take profits and it may give you different stop losses. So I have a habit intentionally where I will just go in because if things are trending, say like here's 25 points. If I feel like I'm trending, well, I've also got a brand new trade 1 tick above my take profit of the $50. And that way it automatically fills me. And I'm going to take another profit, 25 more points. I'm going to sacrifice 3 ticks to maybe go 150 points if I'm in a trend. But every time I change my take profit, or add a new order, I've got to go in and assess, okay, how many orders do I have in and where are they at? And where do I really want them? Is that your question? I want to make sure I'm answering that. In other words, you're not automatically going to have those bracket orders always exactly as you want them. Oh, you're muted. You're muted, dear.
So like if you had an entry and then it dropped and you got in DCA, and your normal behavior would be to use that bracket to drop in this new order because that's how you had it set up. Or is it better just to say, no, I'm gonna buy and then later put in and then let that stop that I originally had play with that one? Will it work on both of those?
I intentionally eliminate the bracket order after my first order's done. Because it's easier for me to go in and add a different take profit. Or even add another stop loss in there, and put it where I want. If it's moving quick, that's why I like that bracket order on my initial. Because hey, sometimes as soon as I hit it, it goes 12 points and I'm out.
Mm-hmm.
I don't want to sit there and have to go in and figure out exactly where's 25 points or 12 points. So I do use the ATMs within Ninja. As soon as I hit enter, it automatically takes the take profit, at that 100 or 200s if I'm trading the range. But any following orders, back to your point, if it goes against me and I'm DCAing and then I'm ready to add, well, then I've gone in and I've deselected my ATM, or I've deselected my bracket order in TradingView, Tradeovate, or Ninja. I've deselected it because I'm being very specific on where I want to add to my position. I'm only going to add the one size, and I'm determining where the new take profit is going to be based on my new average entry price now. Because like if this right here at 951, if it goes against us clear down to here, well, just by virtue of math, I can say, hey, 951 minus 751, 200 points, it's going to come down 100 points. But now I've got 2 micros and I only want 12.5 points above my entry. I'm going to lock in those profits. But I only have to come back 100 points or 112 points versus all the way back up to here if it went against me.
Then you're just putting in your own order there.
But I intentionally will go ahead and remove that bracket when I DCA, and then I will control. In other words, I don't want to DCA add down here and then 12 points later, I hit profit here.
Right.
I mean, I'm profitable on that one micro, 12.5 points, but it's one trade. I view this as one trade, not multiple trades within one trade. I'm managing this trade up here, not a bunch of other trades. Now I've taken, slices as I come back up to the original, but that's a whole different conversation. So I hope I answered your question. So I just, because I'm lazy. So
I think so. You're not
bracket order initially, everything's pre-flight because hey, I'm locking in on a 25K account. I want $50 every time I enter a trade. Oh, darn, it went against me. I remove my bracket order and then I start managing the trade until I win $50.
Yeah. So you are removing the bracket. That's the main thing. You're not having them interfere with one another.
Exactly. Yeah, they get all over. And then I'll delete my original. And then because now instead of it being take profit for 1 micro, I'll delete that 1 micro. And then I put in a new take profit of 2 micros. And so I've only got 1 take profit that I can slide to the precise price point that I'm going to take that profit. Is it 25 points? Is it 12.5 points? Is it now 8.33 or 8.5? Now it's 4.25. I've had them to where I only need like 1.75 points and I make $100. So, but yeah, I will intentionally, when I don't, I actually get frustrated myself because then I have to go in and delete the different brackets because they are confusing. So I'll use the brackets initially because that way my 25 or my 12.5 points, that's automatic. That's my goal if I'm trading within a range. And it's like, hey, I'm sitting down. I want to make $300 an hour. And so, and I got the volatility right now. I believe I'm going to get 25 points wherever. And so I'll set those up. I plan on at least 1 DCA most trades. And so that's kind of where that 12.5 points is really valuable also, because then it goes against me. My average entry price, say if we originally enter here at 951, it comes down to 900. Well, my new average entry now is 925. You know, and here's our range right here anyway. You know, if it breaks out of the range, then a little different story. I wait till it comes up, and then I look for that, oh, we got a lower high. So then I would look at entering up here. Well, now my average entry price is up here. I don't have to come clear back down here to make profit. But in most scenarios here, hey, is this a range? What's the probability of us just kind of going sideways here through the lunchtime lulls, and then overall market's bullish? We're gonna, if we kind of break back above this VWAP and stay up there the rest of the day, I don't really want to be going short. And yesterday was one of those days where I did quit early because we quit touching VWAP. And I'm like, okay, it's power hour. This could continue up away from VWAP and may not come back down. But I will, on these range days, I will sit there and go long or short. It just doesn't even matter around VWAP all day long, all morning long. So here's another trade here. And we're kind of getting in on the upper part of the range, which again, we're below VWAP. So I would go short here before I'd go long, but let's go long here. We're overall market's bullish. We're going to go up here and let's just see what happens. Again, we're kind of above a bear candle closing above the 10 EMA, but just to kind of pause and think about what I'm saying here, if I'm going to go long, I'd rather get in at the bottom part of this support right here. You know, if I'm below VWAP and at a support line, my probability of being able to make some money is a lot higher than getting in at the upper part of the range and having to just sit there and wait for it to come back and retest the bottom of the range, possibly even roll over here. But if it does, so what? So win against us there. Still going against us. We're kind of below this with the bottom of this support here. When we come back to VWAP, we're almost profitable. But this would be kind of one of those areas where it's like, VWAP, things are kind of bearish. Maybe I don't want to add unless I can confirm this is going to be support. And I could add here. And even if it breaks through here, I could still add down here because I got the correct size to handle this move. If I've got a mini, I don't. If I've got 5 micros to start with, and I add another 5 micros here, and then it rolls back down here, I don't really have the account size on a 25K account to absorb that kind of size. That's the key here. Would you rather know that you're going to win every trade, and every trade's going to be a ratio of $50, you know, to a 25K account, $100 to a 50K, and larger as a larger account goes, know that you're going to win every trade, or have a large size to begin with and hope that you win. Say, hey, if I win 6 out of 10 days on one trade, I mean, that's kind of how you gotta look at it. You know, if we win 1.5 hours on Monday, Wednesday, and Friday, lose 1 hour on Tuesdays and Thursdays, hey, we're up 1.5 hours through the week. Nothing wrong with that, by the way. Or would you rather be up basically an hour every day? It might take 7 to 10 trades because you're now trading kind of a range, and you're managing every trade so that it's a winner. That's the paradigm shift. When you're in a trend, don't forget about everything you've done up to this point. Trend is your friend. That's where you can get in a trade and make some good money. So this is to address 70% of the time when the market is not in a trend. That's the value here. So there's a little complex. This is where I challenged some folks are going to get a little frustrated, possibly, because we got to look at things a little bit different. But we've been trained, you've been trained, I've trained y'all, trend is your friend. And we want to get in after we confirm that there's a trend. Well, if the market only trends 20 to 30% of the time, well, what about the other 70 to 80% of the time? And that's what we're addressing here. We do not know what direction it is. Oh, it looks choppy. No, look at it with a different set of glasses. It's not choppy, it's ranging. You know how many times I can get in there and make a vehicle payment or something when it's ranging? You know, you get in there 10 points over and over with a couple micros. Okay, it's like it's breaking out of the range. Shoot, I wish I was in the other direction because it broke out the opposite direction I thought. Okay, I'm going to add once it reverses because you come back and retest that range. And then that's where you get your profits. And now you're back, and now you're into a trend because it retested the top part of that range and then continues up, or retests the bottom part of the range and continues down. We're just exploiting what we know that the market's doing 100% of the time. We just got to start identifying, hey, that 70 to 80% of the time it's in a range, be able to identify that, because the other 20 to 30% of the time it's actually trending. That's when you're going to stay in. Any questions on that? Because this is not new. This is to add another tool to your belt. But when you're practicing this, you got to realize that, hey, if you're going to DCA as part of your strategy, you've got to look at your size a little bit different. So when you know you're in a trend, that's one thing. But if you don't know you're in a trend, then look at things a little bit different.
Good stuff, Jake. I gotta run.
Okay.
Happy
Rhonda,
Thanksgiving.
you too, dear.
Happy
You have a-
Thanksgiving, Rhonda.
Happy Thanksgiving, Rhonda.
See you later.
Thanksgiving.
Take care.
Go, here's where I would be tempted. Now, am I going to get in? We've got 1, 2, 3 bear candles coming down right into 4-hour support. I would still like to see some type of reversal criteria, be it some type of hammer candle, what have you. And Sean, to go back to your point earlier, because I know you were paying attention. Are you on the 1 minute now? I am a lot on the 1 minute, 2, 3 minutes. 15-minute is my mothership. But I'm executing a lot of these trades in the 1 minute because I'm really seeing exactly what's happening at the smaller time frames. But the mothership is really my 15-minute based on these 4 hours, and obviously our daily and larger time frame blocks. Does that help, Sean?
Yes. Yeah, this is, I'm trying to, again, I the concept is there. I need to see it play out, the mechanics of it, but if I don't know if we can.
Yeah, let me summarize, and I know this is going to take a couple sessions, and
Yeah.
I'm good with that. Number one is size relative to the account. You know, with a 25K, a 1 micro is the highest I would recommend to start with. And if you're hesitant to add when it's going against you, there is nothing wrong with that. You know, wait.
I think
wait
I get
until
the
you get that
concept because
double.
then you're averaging down your initial entry price, and then it allows your profit to be closer to where you're at the low point, right? So again, I get all that. It's just that as it happens, the mechanics of adding and how the system understands what you're doing, and
Okay.
that we're not doing anything wrong that's just going to really blow it up the wrong way or anything like that.
No, we're in long, clear up here. We got 1 micro. We just come down and do some 4-hour supports. We should expect a bounce. Let's just say we got a bounce. Let's just buy another one. It's like, oh, what I really like is the fact that, hey, here's break evens clear down here now. And I don't need to go 25 points to get $50. I only need 12.5.
Okay, so
So
when you hit the
that's-
buy, that blue line that popped up, that's your dollar cost average from your other 2 entries that you have.
From the 1
Or
entry.
3.
Because remember, I entered up here with 1 micro,
Oh, okay.
just made our second entry here as a result of our first DCA.
Because we
Which
already, I'm
add
just looking
one
at the other
more.
2 entries that are there. So those are cleared out. We're not using those 2 to the left. You had buy 1 at 974.
Well, here's the original entry was at 974.50.
Okay.
Okay, our second entry, actually, I'm sorry, that was earlier this morning, hypothetically.
Oh, so that's
Right
okay.
now, right here, where I closed the trade out when I sold here, we bought at 951.25, and then we bought at 837.25. The average of these 2 buys puts us right here at this 894.
I think
Perfect.
you're at 90.
It's doing the math for us though. Here's our average entry. So this 894.25, our new take profit is going to be 12.5 points above that. So I'm going to go to 106.75. So 106.75. Where did that go? Oh, 106. It should be 906. I'm sorry, 2906. Another one. I messed that up, didn't I?
Yeah. I think, yeah, because it pushed it way down there.
106 is way down there. So we said 906.75. We're going to call this 906.75. Boom. So it happens to be right here at this larger time frame block, kind of support and resistance. So again, you kind of see these blocks are on here. Let's go ahead and put our template on here. We'll say this is target. So that's our new target. So as soon as we added a new position here, we're trade management now. We're not out of fear moving our stop down. No, we're like, I'm going to win this trade. I've got the right size. I've got larger time frame analysis that says, hey, this could be support. I've got the right size, and if it comes down to here, I'm still okay. But I only have to go 12.5 points past my average entry to say, hey, I'm going to win on this trade no matter what, and I'm okay with $50. My original trade, hey, maybe I wanted 150. I was waiting for that rejection of VWAP. Went against me. So now I'm like, I'm in a range, it's going against me. I'm just going to make sure I maximize my drawdown with a profit. That's the objective of every trade we enter. Keep your drawdown at maximum and make sure you have a profit. Don't sit there and break even and have your drawdown down $100 every time. Does that make sense? So we got to make it worth our time. So we're going to pay a bill every time, even if it's $50. We're going to make sure we win at least $50 on every trade. It's still going against us. We're down 291. We hit like 300. Okay, so that was what, 20%, of a 25K account. So we got that 30% that's kind of getting fairly close. There's 346. $409. So that would have been, that's roughly a third, 500 to 1,500. And now, do we have good reversal here? Do we want to add, or we're like, you know what? We're well below DCA. We only got 1, 2. This is where I think this is kind of why I just let it grind back up through the day out yesterday. And then I was profitable on everything, but just kind of let it go. I come back down to here. Here's where I'd like to add lower highs right here. Let's confirm we don't make a lower low. I would be tempted to add one right there. But if I come down and I'm retesting this low, heck no. So we got to confirm before we even think about adding here that we're not coming back up and rolling over a little bit lower. So I would not add at this point here. I don't like being $224 drawdown on a $1,500 total drawdown. I don't like it. But absolutely comfortable with it, if that makes sense. Because I could have gone down 3 times as far. Now you start asking yourself here is like, okay, going sideways here, we're at 10:42, getting ready to enter power hour. Just let her go, or you could add a position right here. We'll just let her go for the sake of this exercise. That's really what I did with the majority of my accounts yesterday. And then I think I DCA'd my second one. My entry was here yesterday. And I did have my first, I added here. So very similar to what we did here. They come down. And yeah, so we were profitable here versus our original take profit was clear up here. Remember this entry up here? So to make $50, we had to come clear back up here. Instead, we only had to come to this yellow line. And even within the funded account rules, we were right there at that 30%. And this actually is not common. I mean, this is a good exercise because this allows you to utilize your larger time frame analysis, but we did see a $409 drawdown. We entered at a valid larger time frame, what we hope to be support. It come through it again. Looking left, we were definitely okay to still go through here. Overall market's bullish. The two funded accounts, I was done fairly early here. I was done actually here. I'd hit my target here. And then it was all my sim accounts and one funded account that I had to wait for the rest of the day. I had to wait for as close to VWAP up here to actually close everything out. But because of that power hour, overall market bullish, I was long below VWAP. I didn't worry about it. I was really comfortable, especially when we never came close to retesting this later on in the session. That's another reason where I just let it go. I didn't add, not when I had, like I had 5 accounts that were copy trading at the time. I didn't add because of that. Still don't know for sure. And I didn't want it to end down here. And I had minimal size because I didn't make this extra add-on to all those other accounts. Just my 2 funded accounts. I did the DCA and then I got out here. I got out a lot quicker with the profit. That's the power of the DCA. But here's the takeaway. And this is what I really want on this particular trade. We're never going to go long at the upper part of a range. You're ranging here. Yeah, your high of the day's up here. This bear candle closing above the 10 EMA. This is fine because we're going up to VWAP. This is fine. I would have never gone long here like I did in this example. I would have gone long here and then I would have entered here. So we never even come close to that 409 in real world. Does that make sense? I really want to make sure you guys catch that. We're not going to go long at the upper part of a range right below VWAP. We already have a very strong bearish move. We have to respect some of this market sentiment that's already happened throughout the day. And now we're below VWAP. We can go long when we're extended away from VWAP back towards VWAP, but we're not going to enter long right around VWAP. Never, 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 never. The key here is looking at support. Yeah, I'll go long back towards VWAP. And that's exactly what I did. And then it went against me here. And then I added here, it continued against me. I didn't add again because I didn't make it all the way down to my 4-hour resistance or support. And it wasn't long. I was profitable. I was out. That's huge. Because this right here is the key of getting in at the bottom of a range. Overall market bullish. I'm below VWAP. I'm profitable just going to VWAP. That's the reason for going long. It went against us. All we're going to do is manage the trade until we're profitable. We're not going to oversize and try to make it happen in our timeline. As long as you got the right size, and Anthony, this is helped me out a lot. It's like for me to not care yesterday that this broke this support, I'm like, oh man, there was a time where that would have bothered me. I did not give a hoot yesterday. Because I started with maximum drawdown. When I entered here, I didn't just enter DCA, as it's coming down. I waited until what was a high probability of support. I was still wrong, but my size had zero issues with handling it coming down further. And utilizing key larger time frame support and resistance, I've not to blowing an account. I showed you where I had to stop trading on a couple of them, and then I did blow a couple accounts because I DCA'd too much too quick. And then there's a loophole, there's something I was, and you don't just DCA systematically every 10, 20 points. You add when you think it's going to reverse. And you have the right size that if you're wrong, okay, where's it going to reverse again? Can I handle it to that? If I'm wrong, can I handle it down to that? I haven't, here's the beauty of it. Elliott wave. We get in here at the bottom part of this support. It comes down, we add. Well, here's why we win, because normal price action, even in a bearish trend, is still going to come back up here and then roll over. It comes down and hits this support. It's still going to come up 50% of the way and then roll over. That's what makes it so beautiful. So you're still going to see yourself come in to your new average entry price through normal price action. Price does not just keep going down. If it does, that's good. And you're like, what? Because the faster and further it comes down, the faster and further it's going to go back. The key is to wait and get in after that final 15-minute candle starts turning green, the next one behind it. And then how many fair value gaps you got all the way back up? That's, again, a key reversal area. You start looking for those. But if it moves down 200 points, it's going to come back 100 points pretty quick. It's beautiful. It's beautiful. And again, I would not copy trade. I do not copy trade all my accounts because trades are going to go against us. It's going to blow up an account eventually. But the research that I'm finding is that, hey, after you've probably paid yourself multiple times doubling the account, then that's going to happen, and so that's where I'm studying. Wait a minute here. What if we add size and, even smaller targets, meaning, hey, good grief, I'm over trading and is $50, a decent target. Maybe that's laughable by a lot of folks. But I may actually enter 10 trades. But if I'm averaging $50 on every trade that I officially enter, when you look at these small accounts, that's a 30%. That's meeting the consistency rule on a 50K account, on a 25K account. And I do have about anywhere from 3 to 5 trades on Globex. I will do this. And then I only have about 7 or 8 that I'll do in the morning. And if I get into that good, range is tight during Globex and we have a nice breakout and I got my full R2R, I'll play that. And then I'm done with those accounts. In other words, so I'm still doing everything that we've talked about up to this point. But if I don't hit my target or it goes against me, this is what I'm doing to go ahead and lock up the day. So it's a lot to digest. Got to look at things a little bit different. Esley, what you thinking, brother?
No, it's awesome. What I just saw right now about your stop loss being larger, which allows you, for the market to recover going into your plan. Yeah, I didn't think about that, but that's great.
Yeah, we're just stopping ourselves out. I mean, if you're trading range and you're doing sniping, because even Apex, their go-to technology, they actually have a a 1-to-3 reward to risk methodology that they teach. You believe that? With their
Wow.
sniper platform, their training mythology, they have a
Uh-huh.
3-to-1, 1 reward to 3 risk.
Wow.
That's their methodology. And I tried it. It works if you follow, certain rules, but I'm not wired that way.
Yeah.
I'm wired to, I enjoy the analysis, of price, and it's like overall market's pretty bullish, and we need to learn to be on the right side of the trade.
Yeah. Yeah. Absolutely.
But the beauty of it is you can be on the wrong side, and because of that, I mean Fibonacci, because of the Elliott wave, when you add back into at other key areas of support or resistance when it goes against you, again, market price action, you have that retracement. Again, we want to buy at the pullbacks, we want to buy at the dips. We're so used to trading trend. That's what we were kind of taught. It's like, oh, I wait for that opposite color and I get in above that. I'm playing the breakout above that bear candle that's trending up, or below that bull candles that's trending down. And that's absolutely right in a trend. But if the market's only trending 20 to 30% of the time, we're getting in these bear candles closing above the 10 EMA here, thinking we got it. And yeah, I've got my high of the day clear up here, but we're not really trending.
Yep.
We were ranging here. We broke out of a range. We're ranging here, and are we breaking out of this range here? That's what we've got to understand. And then there should be a lot of confidence. Broke out of the range here. I was long. Okay, it's going to come down. Well, it's going to come back and retest the bottom part of this range. Well, that's exactly what it did here. So this is predictable, consistent, repeatable behavior.
Mm-hmm.
It went wrong. We were wrong here. Well, you know what? It's going to come back and retest it.
Yep.
Do I have the right size to handle down to some key price areas for my larger time frame analysis? Now, if we've got our full R in, going back up to VWAP, then we've got an issue, because now you're talking, it could be different.
Yep.
And so we're trend, if I know I'm in trend, might have 1 micro here. Well, if I was to, like, if this was to be a rejection here, of course, just with the market, essentially, I will not be short in the last hour of the market below VWAP. I just won't. I mean, that's just a rule. But if this was the opposite, if this was a range and we would have got in long here, well, no, let's use this as an example. This beautiful hammer coming off. Let's say this was a previous day low. Let's say this is our first entry. Say we were on it. We waited. Beautiful reversal. This is a very strong bullish candle following this hammer. We get in here. This is where I'm going to trend trade. And I see a bear candle like this. I may add here.
Yeah.
It pulls back here. That's fine. But I believe I'm in a bullish move back up towards VWAP on the second half of the session. And so I may add, instead of just having 1 micro all the way up here, I'm going to look at different adds, maybe on these different, I've got a range. I might look at adding here. I might add here.
Yep.
Things like that. But again, do you have the right size?
Yep.
We have the low of the day confidently identified. What has our market been doing essentially every day since 2023? Actually since the end of COVID. It flushes down, but it's been bullish overall.
Yep.
If we can wait until that low of the day is clearly identified and never get in a trade right there. And if all we did was trade long, every one of us would be getting payouts consistently. If all we did was go long, wait for a pullback every time the US market opens, then go long.
Yep.
You know, have a decent stop, because every once, maybe 2 out of 10 times, you know, it does continue bearish. You know, so if it's bearish, you don't enter the trade. But when you're trading at the bottom of a larger time frame, 4-hour zone, and we just go long, every one of us will be consistently getting payouts from our own accounts via funding. I mean, that's just the nature of the market as a whole.
Yep.
That's another thing about what I want us to kind of start having discussions about over the next couple of weeks is kind of the power of this, you know, volume weighted average price. You know, that's where market makers, that's where a lot of volume goes into this particular purple line right here. So if your overall market is bullish, but it's been a bearish for most of the session, you know, hey, you do have a high degree of confidence to go long at any of these points. Yeah, that's where I was able to go long here. Who cares? It pulled down here, because here's where big money's up here. They're gonna close up here for the rest of the day. They're going to settle. They want to balance the market. They want to get it back up here by the end of the day.
Yep.
Being up here and going, or being anywhere in here going short, yeah, it's no. As long as, are you in a bullish market or not? You just got to ask yourself that. And so if I started approaching that last hour of the session, then direction, I won't go short. But if I'm below VWAP and I've got some higher lows, everything we talked about tonight, absolutely hit it all the time. Zero concerns.
Yep.
Zero concerns.
Perfect.
Delana, what are you thinking?
What do you do with a static account if you have a smaller amount of money to kind of play with?
Yeah, I thought about that. It's a two-edged sword.
Mm-hmm.
You know, you really got to be picky, because if you got a static account, your $100,000 account with a $625 drawdown, there's nothing wrong with that, because you have to have minimal risk, and you have to take some small gains and let them accumulate over time, because then that 625 becomes 1,000, then that 1,000 becomes 1,100 and 1,200. Well, you don't have a trailing drawdown in your static account. Okay, once you get up around that 12 to 1,500, you're in pretty good shape. Meaning, one micro to do everything we talked about here, you're in really good shape. When you get to a
Yeah, so
2,000,
just build it up until then, kind of do whatever with
exactly
the
as you pass that evaluation in that account. Here is just a different way, because with your $625 drawdown, one micro, I mean, you're getting in maybe with this big bearish move. If you only got 625, maybe you don't want to get in at the bottom of the range. Maybe you'd rather get in at the bottom of a range when you're above VWAP, when everything's bouncing off of VWAP and going up. Case in point, let's jump over to today, because this has been my moneymaker the last couple days. But this range is right here. I'm bullish. Every time I get a bounce off of VWAP, I'm long. Every time. Okay. This was beautiful today. I was expecting it to go short. And but I got in around here, went long, it went against me. And then I walked away, and it ranged all day long. I was profitable. I made a little over 3,500 a day across all the different accounts. But I'm like, okay, I'm done when I come back above VWAP right here. And then I look at it an hour later, I'm like, we finally had a trend. All day long, we didn't have a trend until the power hour. But everything we talked about today, I did every time we hit VWAP. I didn't care if it was going to go against me, because I was so bullish. And every time you hit VWAP, look at the opportunity when you're long every time you hit VWAP. That's a paradigm shift, but this is, there's no trend here, is there, Esley?
No, there's not. Yeah.
How do you trade that? You know, you could look at these 3 minutes, you know, look at indecision above that.
Yep.
Beautiful hammer, but again, the key is price zone. What is support? Hey, it looks like my VWAP looks like we're going to have an overall bullish day. And we look for this liquidation right here, and that's another reason why I don't want to I don't want to stop. I want this price action to occur. If I come down to here, then I want to go ahead and DCA, because then I only have to come back to VWAP, and I make just as much at VWAP as if I wait till up here, but I do it half the time. You know, but maybe it could have rolled over to here.
So you do the same thing going long and short, right? So you just add.
Yep. And even if I'm below VWAP, instead of buying a VWAP and then going short in today's market, if I'm above VWAP, I'll buy a VWAP and I'm going long. Now I will, if I've got these lower highs, I will take some of these back down into VWAP until I start getting uncomfortable. When I start not hitting VWAP anymore, then I'm like, okay, this could break out and go that way. Because like yesterday, was this yesterday? Yeah, we finally broke. No, it wasn't. Today was, maybe it was down here support, but it broke away and never come back down to it. That was one of the things. I was like, okay, it's late enough in the day. I'm done going short, period. Because I was ready for it just to kind of not come back down to the VWAP. And so they kind of looking at that, but above VWAP, based on kind of what we did today, over and over, I'll go long. But if I'm below VWAP, I'm looking at getting in when I'm extended away from VWAP. And if it continues down, I'm okay with that. But I have so much more confidence that it's going to come back to VWAP by the end of the day that I'd much rather be long playing the bottom part of a range, or the pullbacks, the pullaways from VWAP. And I'd rather play long. It goes back to what I started our conversation with tonight is hey, biggest wins quickly is when I dive into a big bearish drop. But I have far more losses when I'm shorting than if I'm going long.
Yep.
That was just some self-talk, truth, realization, looking at data that I had to really come to terms with here a couple of weeks ago. So I'm like, you know what? What happens if I do a lot less shorting? And all those PDFs and stuff I showed you, for the most part, I'm shorting back into VWAP, but not really doing a lot of shorting these days. And the market's bullish anyway. You know, we got like bearish nights and bullish days, or you know, bearish nights and bullish days, or vice versa. It's kind of weird, but these right here are becoming my money makers, and just small sizes that just, you know, a half a dozen of these, and managing every trade until it's a winner.
Yep.
Losing.
It's kind of like
is,
hedging, right? With options. It seems like that's what you're trying to do, basically. Sort of, because except you're not reversing. You keep following the trend.
yeah, my goal is to identify trend for sure, you know, but identifying when we're in a range and getting in at the bottom of the range and trading up at least to 50%, if not all the way to the top, you know, is the goal on every trade at the bottom of the range. And if I'm at the top of the range and I'm going to short, especially in this bullish market, I will go ahead and take profits on a 50% retracement back down through the range. Because I think anytime we're profitable on a short trade in a bearish market, hey, we must be good. Who does that? You know, so I'll stay in trades a lot longer, long, if I get in at the bottom of the range, where I'm a little quicker to take profits if I'm short. But sometimes I'm just sitting here, it's like, I know it's gonna come back down towards VWAP or at least close to it. Hey, I've got every bit of, 12.5 to 20 points. I'll go for it. But a lot more comfortable to go long around VWAP than I am short, even above VWAP. Because how easy could we just continue up and away from VWAP all the way up, create a new high, retest here, and then it's up and away. And if I was targeting VWAP within this range, I mean, that happens. And that's another reason where I'm quick, take profits on a short back towards VWAP. Are we ranging? But I love being long at VWAP.
Yep.
I don't even worry about it in this market. And then if it breaks below it, I actually did expect this break below here. So I think I got in around here, but I was like, because here's what I was profitable every trade today, but I couldn't quite close out before 10 o'clock. Right here was when FOMC was supposed to happen. Okay, it was a nothing burger. I was so mad because it rolled right over, but I actually was a little bit short, expecting to come back down to 20 to 935 actually. And I'm like, I am not able to get out and close this trade before FOMC. So I took a $250 loss. But I'm like, I'm not going to trade because there's so much pressure in the market. Is it sideways because people are just waiting for him to speak, the notes or the minutes or whatever? Unless I was looking at the wrong notes, but there was a nothing burger here. So I took a small loss. So I just sat down and said, okay, I'm going to get that back. And that's all I did through here, but I looked for longs. Once I had this, I actually got in here, pulled back against me. I added extra here, DCMA, come back down. And it was my third trade, maxed my drawdown, got that loss back, and I walked away. And then of course it took off and went all the way up here, but I was fine because I met my objectives. I got out because of news, took a small loss. I just couldn't quite get back to profit in time before the top of the hour, but it was fine. And I'm like, well, I know how to get 3 $100 wins back real quick. And I did that in 30 minutes after FOMC, after the 2 o'clock Eastern Standard Time. But my logic was, hey, here's my 50, here's my VWAP. I'm in a bullish market. As long as I'm long, I'm going to be profitable.
I'm trying it right now on my paper account.
And that's how you do it. And the key is the correct size based on the account. And don't be in a hurry to add. Now you're going to look at times where if you would have added there, then you would have gotten your profit a lot quicker. But if you never have to add because it never does make it down to that larger time frame support, well, that means you eventually made money. Maybe I've had a couple times where it was 4 hours before I could make, get back to break even and then make a small profit. If I'm on the right side of the trade within those 4 hours, I might make 1,000. If I'm on the wrong side of the trade, I might only make 100. And that's how you got to kind of look at it. It's like, don't get frustrated because you only are slightly profitable on a given day. But if you're on the right side of the trade, and so here, I won't demonstrate it tonight, but envision having a bracket order, and you're pretty comfortable you're in a trend. You set that bracket order for, say, $200 profit. This is a larger count, maybe you got 5 minis. So if my take profit is at 20,980 or 200, I am closing out that trade, maximizing my drawdown, have a realized gain of $200. I'm back in the trade at 20,980.25. That's already set up before I even close that trade. So it closes a trade, puts me right back in it. That way I'm back down to my normal size. So if I DCA'd, so let's say I've got, 10 micros, because I had a 5 micro account, or size, and I DCA'd once, added 5. Well, I'm gonna close out those 10 for a $200 profit, and then I'm back to 5 one tick later. And I'm continuing in the trend. So that's what I mean by this. Also, this does not stop us from trading a trend. You're going to sacrifice a tick, but we're not going to sit there and chase. I'm willing to give up a tick to maximize my drawdown and to get back to a normal size. So if I get 5 micros and I get in a trend that moves 200 points, I'm sacrificing 1 tick every 25 points, essentially. So I'm 2 points out of 200 you're sacrificing. And more commissions and fees, that's true. But every single time you hit a take profit, your drawdown is maxed out. And you pull out your ATM card, pull out your cash, put it in your pocket, put your ATM card back in the machine, pull out another $200, pay another $3 terminal fee, pull out another $200, put your ATM card in there, pay another $3 terminal fee. But that's how you trade the trend, utilizing the same strategy. Now, when you start building a larger cushion, paying yourself a couple times a month and building that cushion in your accounts, you know, then we don't have to play this drawdown game as much. And that's what's nicer about the larger accounts. So this again is to get everybody to a funded status, start getting some payouts, and then when you no longer have a trailing drawdown, you can trade a little bit different. Why change the rules if you're winning the game? You're gonna have to ask yourself that. But it'll be a size transition. You'll have a larger size regardless. Like your static accounts, fell on it. You know, you'll end up having a $3,000 static drawdown, you know, after a couple months. You know, then you're going to pay yourself what, 1,500. Well, what if you won 3,000? Well, now your drawdown's 1,500 more. You know, and it's not until 3 months, 8 paydays, where you even have the option to withdraw it all. But we don't want to do that. Not if we're winning the game. That's when you're adding new accounts. So we trade to win. This people telling us over and over that you're gonna lose, you're gonna. But that's the wrong mindset. It's the wrong mindset. Trade to win. Utilize your larger time frame analysis. Don't change your trend trading. Those become your targets. Get on the right side of the trade. Understand the proper size of the account. Keep it small. Allow small wins to accumulate. All right. Y'all have a happy Thanksgiving. Anthony.
Hey, Jay, thank you very much. Tonight was awesome. Happy
Thanks
Thanksgiving.
in the background.
Yep.
Happy
Happy
Thanksgiving.
Thanksgiving. Have a good night.
Happy Thanksgiving.
Yeah. All right. This went on a lot longer than I really did plan on.
It's all good stuff. It's a lot of information to digest.
This
So
was
thank you for taking the
different.
time.
Yeah.
Yeah, it's the PDFs that I share, I don't really like showing that stuff too much because it's like we've been in nothing but range and I haven't really been sharing the trades, but it's like I'm getting 2 and 3 hours every day. You know, but I can't go on there and show where I entered and how I got the profits because I've just been focusing on the range. It's like, okay, we're in a range now. I'm going to trade the range. And so I'm like, it's like if the market's ranging 70% of the time, it's like I wish someone would have pulled me aside and kind of taught me that. It's been a challenge to kind of figure it out on my own, but the information's out there. And I see it over and over when I back trade. I'm like, there's got to be a way to do it. So I'm like, you know what? I'm just going to try it. And I'm like, I now don't like getting in above candles. I like getting in at the bottom of candles. And that's a paradigm shift in everything we've kind of talked about in the past year and a half is, hey, get above that or below that opposite color candle. I just assume get in the bottom of a candle. Because I'm profitable if I go back to the top of that candle. You know, and if I'm at the bottom of a range, then the probability of that is very high. So yeah, I'd love you to experiment with it. I'd love some feedback.
Yep.
Anybody listening after the fact too, again, use your paper trading within TradingView or Ninja Sim, and don't hesitate, you know, with a sim account. But when you start understanding, utilize your larger time frame analysis, support and resistance. Don't DCA until you're really at a reversal point. That's the key. Don't just add it to bring down that entry point, because it could go against you. And that's what I'm finding out. I've not been able to put an account at risk by understanding that's what I missed before. I was just kind of DCAing and thinking this is cool. And yeah, it works great if you're on the right side of the trade and you can DCA a couple times and as long as it comes back. But when you got 5, 6, 15-minute candles, that doesn't work. If you're on the wrong side of those, you know, 5, 6, 15-minute candles all going the same direction. And if you're on the wrong side of that and you DCA, you know, persistently, it doesn't end well. It does not end well. But if you've got a micro, even on these 25K accounts, and you let those 4, 5, 15-minute candles go up 300 points, what's the probability that it's going to retest back down at least 150? I've never seen it not. You know, at least in the last few weeks.
Right.
And then when you're on the right side of it, that's where that adding one tick later, just like last night, I happened to just get in when we had that big kind of flush in the early evening, my time. I went long, and I'll be darned if that wasn't the low of the night. And I funded that other account just by adding, you know, one tick higher, and kept taking $50 profits on that 25K account. And that was just a little account that I learned the hard way, and I had it down to just a couple $100 remaining. I was about ready to blow it before I figured out what I was doing wrong. And now that one turned around and funded. So, and that was Globex in the evening.
Mm-hmm. Yeah.
That's another thing that I know a lot of folks are like, hey, working during the day, and this works. This is actually something that works while Globex is ranging. And then if you happen to get into a trend in Globex, well, that makes it that much better. So more opportunities, understanding when we can start trading in the 70% of the time that we're not in a trend. I think that's going to help a lot of folks if they can have the confidence. They're going to have to practice and gain the confidence of trading, entering in at the bottom of a candle, at the bottom of a range versus a breakout. That was so hard for me. And it's almost makes me angry that I was just kind of taught that's the only way, you know, and it's not. I started listening to videos where they say new traders will enter here. I'm like, I'm not a new trader, you know?
Right.
And then that became the reality. So I got looking about, man, every time it pulls back and bounces off the 20 SMA, you know, every time we get a little pullback here, I'm like, that's where I really want to get in. And I'm like, I've got this jacked up. And then it started rolling against me. So I'm like, ah, crap. But then when I kind of come across the DCA and Apex opened it up for one, they're like, yep, DCA is a valid strategy. We accept it now. You know, you can DCA. We don't care. That was key to me. That obviously is key to everyone. We could DCA all we want in the evaluation, but we need to make sure that we have a winning trading plan, you know, that is going to work in the funded accounts. And so I'm replacing all my smaller accounts with the 150s, and I've got a 250 that I'm up a few thousand in just a couple days, and it just stress-free trading is what I like about it now. So I really do hope this adds some value.
Yep, it did. Thank you.
All right, going on 2.5 hours. I gotta let you go.
All right. Well, happy Thanksgiving.
Thank you.
Thank you. Happy Thanksgiving to y'all.
All right. Take care. Bye.
Bye.